Find me a single other asset that's going to give you 100x asset. So I've come at this in a number of different ways. One is there's somebody you can find on Twitter called Plan B. He's anonymous who actually works for a family office in Holland, and he's a quant. And he analyzed a stock to flow model, which means they look at the amount of supply over time of an asset and how it affects price. It's scarcity, essentially. It's the same way that gold works, diamond works, things like that work, rare assets. And it becomes relatively predictable, interesting enough. That predictability would suggest that we might get somewhere like $1 million by 2025, 2026. Then we can use the logarithmic scale and look at the price of Bitcoin on a logarithmic scale. It kind of gives you the same price projections. Then the other way of looking at it is looking at the total amount of above ground supply of gold and its price, and then do the same for Bitcoin. And you get something similar. Basic charting techniques give you something similar. So there's a number of things that suggest that. But at a more sensible level, $1 million is it going up 100-fold from, well, it's now gone up to 20,000. So it's going up 50-fold from here. Mm-hmm. So Bitcoin's currently worth about $300 billion in market cap. So that's saying, okay, Bitcoin's worth $1.5 trillion. That's about gold's market cap. That's about $15 trillion. Gold's $11 trillion. So it's saying Bitcoin will be the same price as gold. Now, where's gold going to be in 5 years' time? Probably double or triple from here. So Bitcoin's going to be somewhere like 25 to 50% of the market cap of gold at the same time. So that's not unreasonable. I mean, basically, supply is restricted, algorithmically restricted, so it can never be changed. So you always know what the supply is. So then the question is okay, what is the demand? Well, what's interesting about this is the more it goes up in price, the more the market cap goes up, the more financial institutions need to have it. It's also, its price performance also draws more into it. So we've got a very, very skewed risk reward, which is why it tends to go extremely fast, extremely far. It's the best performing asset class of all time over 10 years, 5 years, 3 years, 2 years, 1 year, or something crazy. I mean, we've never seen an asset like this before. We haven't yet got the institutions into this. They're all coming into it. I know they are because I'm speaking to them all. I just got off the phone with the largest investment advisor firm in the United States. Their founder is teaching as many investment advisors as he possibly can why Bitcoin. They can't invest yet because there's no ETF, but the moment it comes, these guys have 5 trillion of assets amongst the investment advisor community in the US alone. And if they were to put 1%, 10 basis points in, that's 5 billion immediately. But the chances are it's going to be much more because it's a very fast moving asset. So we've got, I've never seen anything like the skewed risk reward currently in Bitcoin. It's crazy. And meanwhile, the supply can't adjust. And everybody's taking their coins off exchange and putting them in storage because they also expect the price to rise further. So there's literally no supply. Out of the Square Cash app and PayPal, they're pretty much taking all of the mine supply of Bitcoin off the market every day. And then we've got the Grayscale Trust, and then everybody else. There's just, the only answer is the price to go up. Speaking to the financial advisor today, he's like, the problem is all the clients are asking for it. And that is the problem. And I'm sorry, but every day when you get an announcement that Fidelity's in the space and this asset manager and that asset manager, and they get the incremental better alpha, it forces everybody else to do it. So it's as George Soros would refer to them, this is a reflexive loop. It's highly reflective, probably the most reflexive I've ever seen, because almost everybody has a fear of missing out, or in financial market terms, is short call options on the way up. and everybody's forced to buy on the way up.
Mm-hmm.
I've never seen anything like it, literally.
Mm-hmm.
That is what Bitcoin is all about. It's the life raft. It's the way that you and I can say, you know what, we're not comfortable with this anymore. I don't want to hold euros or dollars or pounds. I'm just going to hold Bitcoin, and we can just step out. And because I don't know how it all ends, whether we have to have a giant debt jubilee, start all over again, create something different, but something will happen in the end. And I don't think that end is too far away. So it's nice to have something like Bitcoin. You know, I was postulating over the weekend about the idea that what happens if they created this central bank digital currency, but the basket version? And what happens to be a member of that basket? You're restricted to 2%. You're allowed the 50% increase in money printing to get out of the crisis. And then the only way you're going to do it is to agree to a 2% increase in money supply only. So then you've got a central bank digital currency that looks like Bitcoin. Okay, that's interesting. Now, can you then, you will have inflated your way out of the debts because you've devalued by 50% essentially. Those kind of things, they're possible. And then maybe you wrap all these debts up and issue a perpetual bond at 0% interest rates. So there is ways out, and it's not going to be a hyperinflation, everybody, you know, having to eat grass in a field because there's no food to live on. It's not going to work that way. There are other ways to answer this, but they're going to take a crisis for people to do it.